afternoon. I want to thank everybody for logging in and calling in today to today's webinar on why should you invest in real estate. We have a great guest host today, TJ Hines, that's going to take us through some of the basics on why someone would invest in real estate. What are some of the advantages of real estate as an investment? And I'm going to speak a little bit at the outset kind of on how you can use an IRA to do it, but really the bulk of today's presentation will be TJ really explaining why individuals invest in real estate, and again, some of the 6 top reasons and going in more detail on why individuals do that. My name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. I've been with the Advanta since almost 11, 12 years now, here doing primarily working with people to help set up an account, help really understand what self-directed IRAs are, what the rules are, and kind of how the overall process works. I'm also a licensed attorney in the state of Florida, although I don't do any legal work for Advanta clients. Now, as we go through the presentation today, if you're listening live, I really encourage you to ask questions throughout the presentations, but you'll have to do that by typing your question into the chat box on your screen. I don't have the ability to really unmute everybody for someone to ask their questions. It'd be a little too noisy to do that. But if you do have a question for us, please either send me a direct question or just type it into the chat box on your screen. There's ways to do that. Make sure we get those questions, again, whether they're from myself or for TJ when he begins his part of the presentation. Now, a quick disclaimer at Advanta IRA. We don't provide any legal, tax, or investment advice. We don't also endorse any products or specific strategies. What we like to do is provide information and material for educational purposes. We've had TJ come on today, and he certainly is someone who is a real estate investor and could potentially sell you or talk to you about specific real estate investments. But for coming on today, it's an educational capacity, and so we provide a lot of the educational webinars and the seminars that we do to that end. Now, we talk about tax issues, legal issues, investment ideas. We do encourage you to talk with your individual attorney and accountant, financial advisors, certainly people we can refer you to as well before entering in any particular investment. Now, just a little bit about Advanta. We are a nation's premier self-directed IRA administrator. With in our office, we have a combined over 20+ years in the industry. A very knowledgeable staff. What we like to do with new accounts, or what we do with our new accounts, is give you a really personalized customer service experience. Through our concierge-style service. Each individual client is assigned to one particular account manager within the office who will help them throughout all aspects of opening an account, transferring funds, and ultimately making the investment into real estate or one of the numerous assets that our clients invest in. Now, the cash that we hold here at Advanta is protected through FDIC, and we do hold currently over $700 million in assets. For all of our clients. Again, we have an office in both Tampa and in Georgia that we operate in, and across that we have quite a number of assets under management. Part of this webinar today is part of our commitment to providing educational opportunities for clients really to learn more about self-direction in particular, but also just other issues that are ancillary to self-directed IRAs and investments. And we really believe very strongly in educating our clients, our prospective clients, so people when they come into self-direction know what they're getting into and fully understand that process. We have a lot of events. We have on-demand classes. The class that you're listening to today live is being recorded. Now, some of you may be listening to the recording and are already touching and tapping into those on-demand videos that we have on our YouTube page. We also have blogs on self-directed aspects. So again, we want people to be educated, knowledgeable about self-directed IRAs, and go into that with their eyes wide open. And so we provide this material for you to indulge in, and also certainly can call us with any questions that you have. And for people who maybe this is your first time listening to what self-directed IRAs are, again, the bulk of presentation we're going to talk about real estate as an investment, but touching quickly on what a self-directed IRA is, it merely self-direction refers to the ability the IRA owner to control the investments that they make within their individual IRA, their individual 401k plan. So individual that has an IRA or has retirement funds, when you're self-directing it, you have the ability to put that money into real estate, into mortgage notes, into private placements, precious metals, foreign currency, and a number of other different assets. But the accounts themselves are still regular IRAs, Roth IRAs, SEP IRAs, etc. Self-directed refers to the ability for you to make investments that you control and that you're more familiar with. So as you can see, again, the self-directed plans include traditional IRAs, Roth IRAs, simples, any former employer's plan, a 403B, 401k plans. They can also be self-directed. So again, if you go to the IRS website and type in, what is a self-directed IRA, you're probably just going to get a blurb telling you that you have the ability to invest in a wide variety of different assets. But the IRS still looks at your IRA account as either a traditional or a Roth or a 401k, et cetera. So if you have one of the accounts listed on this slide, you can self-direct it. And really self-directing means, in the way we define it, being able to pick from any number of different investments. There are other companies, some of the brokerage firms out there will say they have a self-directed IRA, meaning simply that you can pick from the mutual funds, pick from the stocks that they offer. But really, truly self-direction is getting out into a number of different types of assets, and that includes a lot of the real estate assets that we're going to talk about today. Someone wanting to invest in residential real estate, whether it's a rental property, whether it's a flip. You can invest in commercial real estate, condos, duplexes, tax liens. You can invest in mortgages and notes. You can invest in REITs, which are real estate investment trusts. Now, I think what we're going to talk mainly about today with TJ when he comes on in just a few minutes is investing in investing in your own property. Now, there are REITs out there that are where you invest into, it's almost like buying a stock to an extent, where you're buying into a real estate investment trust. You have no direct control, and so we don't deal a whole lot of that here at Advanta. We see much more people, individual, wanting to buy a property that they can control, that they've identified, they can pick their tenants, etc., using their IRA simply as the vehicle and as the funding mechanism to buy and purchase that particular asset. So in the real estate realm, this is generally a lot of what we see. Again, we deal a lot as well with gold, silver, other types of alternative assets. But for today's purposes, we're going to be talking about real estate assets. And just going to go over a quick case study to illustrate how you can buy property in your IRA. Now, if you want to learn more, it's going to be very short, to really get a much deeper understanding of real estate in your IRA account. I'd invite you to attend one of our other classes as well, where we go into those details and some of the rules in a much more in-depth fashion. But just very quickly, buying real estate in your IRA, we'll take Susan as an example, has $150,000 or more within an IRA or a 401k, has identified a property, a rental property that she wants to purchase, hold in her account, as the investment, foregoing the brokerage IRA account. Her first step is to open up her Advanta account and then do a transfer of the funds from that brokerage IRA into the new Advanta account, the tax-free movement of money. She gets the account open, she gets money transferred, she's again found the investment property. We will then work with her to make sure that she writes the offer and the contract in the name of her IRA account. It's very key when you're buying property through your IRA that you title it correctly. We work with you to make sure that happens. And she's also going to submit forms to Advanta, to her account manager here at Advanta, saying, I'm buying this particular property with my IRA account. And our job at Advanta will be to work with the title company, work with the attorney, to get the documents drafted in the name of her IRA account. That's our job, that's our responsibility, to get those documents drafted. And then have Susan, as step 5, they review and approve all those closing documents prior to us signing the documents and submitting the funds. So we're going to get her to approve the closing documents. Ultimately, we sign the documents, wire the money to the closing agent, and then move on to our ongoing record-keeping function. So once the property has been purchased in her IRA, and again, that was a very short overview. There's definitely some many more issues and questions that I'd like to answer either at the end of today's presentation or maybe in a different webinar. But once she's purchased the property, all expenses, the repairs, the maintenance, the taxes, insurance, get paid directly by her IRA. So for Susan, we purchased this property for $150,000. We went through closing. Now going forward, we're going to process her $400 or so a month of expenses. Again, the repairs, ongoing maintenance, etc., gets paid out of the IRA. We will take care of paying those bills. She sends them to us. We pay them out of her account. And then she's getting rents of $1,800 a month back into her IRA. So her tenant each month writes a rent check for $1,800, sends it to Advanta, we deposit it to her account, and she gets the net of $1,400 back in her IRA with no tax consequence. Okay, whenever an IRA is making an investment, your IRA is returning income to the account, the money coming back in is not subject to any taxes at all for you. That's one of the benefits of investing in the IRA. So she's netting over $16,000 a year, over 10% return back into her IRA. And if she decides to sell the property at a later date, any profits that she makes comes back into the account as well on a tax-free basis. Now, if your IRA doesn't have enough money to buy the property on its own, you can use a couple different techniques. One would be partnering with other individuals using your IRA, other people's IRAs, personal funds. If you do a partnering arrangement with somebody else and your IRA is buying a percentage, then your IRA just needs to split the income and expenses proportionally as well. You could also make an annual contribution to your account. You can potentially use your IRA to borrow money on a non-recourse basis, where you're not allowed to personally guarantee the note. Again, some of these issues, a much deeper discussion to have with someone here at Advanta, or maybe ask a question at the end of the presentation today. So again, short overview of buying real estate in your IRA. Be much happy to go through more details with someone in regards to that. But again, today's presentation more so is about investing in real estate, really kind of some of the basics. So if you're someone who's a seasoned real estate investor, hopefully you'll pick up something. Certainly people who are newer to real estate are wondering, why should I invest in real estate? We brought TJ Hines on today to talk about that. TJ has been investing in real estate since 2011. He's bought and sold over 100 homes, whether it be from wholesaling or from fixing and flipping, which he's still doing today. But in the past couple of years, he's really shifted his company's focus on creating long-term wealth with single-family homes and multi-family apartment buildings. He's a dedicated father, husband, and educator and mentor, and he's also a published author with 2 books currently on Amazon titled Virtual Wholesaling for Dummies and How to Protect Your Assets and Preserve Your Hard-Earned Capital. We're happy to have TJ on today to really share his knowledge. TJ, are you there?
I am here, Scott. Thank you so much for the introduction.
Great. Yeah, no, great. And I'm going to let you take over from here and just remind everyone who's listening live, if you have questions as you go through the presentation, please type those into the chat box on the screen. We'll make sure we get those answered. But TJ, I'll let you have it.
All right, cool. Thank you so much. Hey there, ladies and gents. How are you guys doing today? It is a great day to be alive, any day for that matter. I want to welcome you guys to Real Estate Investing 101, and I feel so very honored and blessed to have the opportunity to be on this webinar with you guys today, talking to you about my passion, which is real estate investing, and, of course, having the opportunity to partner with one of the leading reputable self-directed IRA companies in the United States, Advanta IRA, with offices currently held in the Tampa, Florida, and Atlanta, Georgia areas. Just my brief background history, as Scott kind of touched on, is I've been a full-time real estate investor for the past 6 years, and we focus on building long-term wealth with real estate. The greatest gift of all is I get to show and educate people just like you how they can join in on the fun with us. The purpose of this webinar is to introduce you to why you should be investing in real estate, if you're not already, simply because of the advantages real estate has compared to traditional models of investing. As you know, investing in real estate is not advertised on the open market, but traditional models are, all simply because I believe Wall Street wouldn't be Wall Street anymore. So as you can see in the agenda, what we are going to cover is why you should be investing in real estate, the 6 advantages you have by investing in real estate, how to identify the right investment, knowing how to mitigate your risk, knowing what to look for, how much capital do you need to invest in real estate. Can you invest in real estate using an IRA, 401k, 401b, CD account? Are there any fees or taxes that you need to pay using any of these traditional models? And can you invest in real estate if you don't have any experience? So we're going to go ahead and get right into the next slide. And why invest in real estate, it says here. That's a great question. I've done lots of research over the years, and I've discovered the number one worry most people have and that is, will they have enough money to sustain their current lifestyles in retirement? In most traditional models, you don't have access to cash. But with real estate, which we will cover in the next few slides, is how you can generate an income on a consistent basis, giving you the cash flow you need to sustain your current lifestyle, or better yet, increase your lifestyle. How many people on this webinar here would like to expand their lifestyles instead of cutting back on what you're doing? You can just simply type yes in the message box. I'm pretty sure I can see a whole bunch of yeses over there instead of no's. But simply over the years, real estate has proven to outperform traditional models of investing well before me and you ever existed. And might I add, 90% of today's millionaires have created wealth by investing and owning real estate. Not to mention, it's a hard, real, tangible asset. So on the next slide, we will identify 6 advantages you have by investing in real estate. And these 6 advantages consist of cash flow that you're able to get from your tenants, tax benefits that also work in your favor. We will briefly talk about how appreciation comes into play when investing in real estate, how inflation helps you preserve your capital, not putting your principal at risk. You can also control your own destiny by having the power of decision making. And last but not least, how you can leverage the capital you have. The first benefit that we'll cover here is cash flow. As I mentioned earlier, I've discovered the number one worry from most people, which is, will they have enough money to sustain their current lifestyles entering into their fall and winter seasons of life? I mean, let's be honest here, folks. The last thing we want to do is feel like we have to downsize in order to make ends meet. In most traditional models of investing, such as the stock market, 401ks, CD accounts, traditional IRAs, none of these vehicles give you the liquidity you need. With real estate, owning rental properties allows you to have consistent income through cash flow coming in from your tenants, all the while at the same time they're paying down your mortgage. In traditional models, what happens if you decide to withdraw early, or if there's an emergency and you need the money right away? If you need to withdraw early, you have to pay fees on top of paying taxes just to get access to your money. If you ask me, folks, I think that's totally ludicrous. Having tenants in real estate is your source of cash flow, so generally there are no worries there. In the next few slides, we'll talk about the second advantage, which are all the tax benefits that work in your favor by investing in real estate. Just as a disclaimer, before we discuss the tax benefits, I will let you know I'm not a certified CPA, so please consult with a real estate tax professional to make sure these claims are justifiable. Before we move on, let me ask you a question. Aren't we all here on this webinar to see not only how we can grow or create wealth, but most importantly, how we can preserve it? You can just type yes or no in the message box over here. And listen, I'm all for paying my fair share of taxes, but not any more than I legally have to. So moving on in the next slide, we are going to talk about the 5 tax benefits that you prosper from, all while investing in real estate. These tax benefits consist of deductions, long-term capital gains, 1031 tax exchanges, no self-employment tax, and last but not least, tax-free refinances. The first benefit we will talk about are deductions. I know this may sound a little crazy, but the government says we will reward you all of the tax deductions possible if you decide to invest in real estate, starting with the mortgage on your loans. That's right. You get to deduct a portion of your mortgage if you have rental properties. You also can deduct the square footage of your home office if you have one. You can deduct home expenses such as your fax machine, computer, internet, cell phone, and any supplies you need to run your business. What if you need to make a few trips back and forth to your rental properties? No problem. The government says we will allow you to deduct the gas mileage. Also, your meals and travel can be deducted. Now, this is one thing I want you guys to keep in mind. You can't up and take the family to Disney World and decide you want to deduct the whole trip because you stopped to take a look at a potential rental property on the way. That, folks, is called cheating. And the last thing you want is to be audited by the IRS breathing down your neck asking you to prove your claim. So moving on to the next tax benefit, let's briefly discuss long-term capital gains. Ultimately, true wealth is created by buying and holding real estate over time. The government rewards you for doing just that. For instance, if you decided to turn property for quick profits without having a self-directed IRA, you will have to pay capital gains tax depending on your income level of upwards to 30 to 39%. But by having a self-directed IRA, your profits are now tax-free. Now, even if you don't have a self-directed IRA and you decide to hold the property for long-term wealth creation, the government says we will tax you more favorably, roughly in between 15 to 20%. But again, if you are a self-directed IRA account holder or you plan on becoming one, you don't have to worry about paying upfront taxes at all because your profits or income are tax-free. If you are not a self-directed IRA account holder, you should really think about teaming up with Advanta to compound your returns, creating wealth much quicker and preserving it for the long haul. In the next slide, I wanted to give you a simple comparison of you versus your neighbor in terms of being taxed favorably by the government. So let's start with your neighbor. Imagine he owns an office supply store and makes $60,000 per year. His income is taxed at 15%. He also has to pay self-employment tax of 15%, which results in him losing a third of his income to the IRS. Now tell me, who here on this webinar wants to sign up for that game plan? You, on the other hand, invest in real estate. Now remember, the government rewards you for investing in real estate. Let's say you earn that same $60,000 per year, just as your neighbor. $40,000 of the income came from rents in your rental properties, and another $20,000 came from a property you sold. You pay no taxes on the $20,000 in capital gains and no self-employment tax on any of your income. You only pay 15% income tax on the $40,000 in rental income. But with all the deductions and depreciation, you pay nearly next to nothing. Not to get off track or anything, but depreciation is also a powerful tool the government allows you to use. But I'm assuming since most of you here are self-directed IRA account holders or plan to be, depreciation would be irrelevant because you already have the luxurious benefit of not paying any taxes on the profit or income earned. So again, I highly suggest you start taking advantage of using your self-directed IRA to invest in real estate. If you don't have a self-directed IRA and you are on this webinar, please consult with Scott at Advanta how you can make this all possible. Moving on to the next tax benefit, we will discuss the powerful strategy of using the 1031 tax exchange. In order for this strategy to work, you have to team up with a 1031 exchange specialist. This is a strategy used by many savvy real estate investors when they sell. This cool strategy allows you to bypass paying taxes when you sell, and when you do sell using this strategy, you are allowed to use the profits to purchase a property that's similar in higher value. So let me give you a brief example how this can play out in your favor. Let's say you decide you want to purchase a 20-unit apartment building that is underperforming with high vacancies for $800,000. The building may be worth $1.5 million after you have put in $200,000 in repairs and upgrades. In 4 or 5 years, you decide you want to sell for the $1.5 million, making a profit of $700,000. By using a 1031 tax exchange, you are allowed to take your profits without paying taxes on it and use it to acquire a similar piece of property in larger value, such as acquiring a 50 or 75-unit apartment building. This is one of the most powerful strategies that allows you to create wealth quickly over time. And guess what? You get to keep doing it over and over and over again. Now, once you get ready to cash out, you will have to pay taxes on the back end, but having the ability to shield your taxes from the government, say for 5, 10, 15, 30-plus years, however long you want, will allow you to create wealth and a legacy for you and your family. Moving on to the next tax benefit is the no self-employment tax, which we briefly covered in a few slides earlier. This strategy is just...
If I can, I just want to reiterate, make sure I mention something too on the 1031 issue you just talked about. For the people, if you're using an IRA, the great thing with an IRA is the IRA is a 1031 in and of itself. So 1031s are great for properties held outside of an IRA, but if you do have an IRA and you're investing in properties through that entity, the IRA itself acts as its own 1031. So I just want to make sure people got that too. But great job. And again, if you have questions as we go forward, please type those into the chat box on your screen. I'm sorry, TJ, go ahead.
No, that's a great point, Scott. I'm glad you intervened in that. So yeah, we're going to talk about the next benefit, which is the no self-employment tax. As I mentioned earlier, the government says there is no self-employment tax on your rental income because the government doesn't classify you being an investor as having a self-employed business. So therefore, your rental property income is not taxed as earned income. But once again, you want to check with your CPA because it could all depend on your corporate legal structure. So moving on to the next tax benefit, last but not least, let's briefly discuss tax-free refinances. This strategy is just as powerful as using a 1031 tax exchange. For example, let's say you purchased a 10-unit apartment building for $400,000. In 2 years, you were able to reposition the building and stabilize it with a new tenant profile. You decide you want to see what the property is now worth by getting an appraisal on the property. The appraisal came back good in your favor and revealed by repositioning the building, you created an extra $350,000 in equity. You decide you want to refinance and take the equity out. Why? Well, I'm sorry, guys. You decide you want to refinance and take the equity out that you created. Guess what happens to the equity that you took out, guys? You don't have to pay any taxes on the equity you took out. And the reason for that being is because you didn't sell the property. And just as you did with the 1031 tax exchange, you can take the profits and invest it in a larger asset. You can repeat the same process over and over again. Now, keep in mind, another great thing that just happened when you refinanced the property and took out the equity, you have little of your initial capital that's left in the deal, or maybe none at all. In the meantime, you are still cash flowing this asset until you decide to liquidate or sell. This ultimately will accelerate your cash-on-cash returns and create wealth for you faster than the speed of light. Do you see how powerful investing in real estate can be and all the tax benefits that work in your favor? If you do, you can just simply type yes in the comment box. Do you also see how the government favors you if you decide to invest in real estate? So now that we have addressed all of the tax benefits of investing in real estate, let's move on and talk about the advantage of having appreciation work in your favor.
All right, TJ, if I can, I'm sorry, I don't mean to interrupt again, but we had a question or two pop in. I want to make sure they're regarding the tax things we were just talking about, so I want to make sure we get to them. One of the questions is, I said, how you would have, basically taxes are on the back end of a 1031. You're able to defer taxes all the way to the end, similar to what you do with an IRA. They were
Correct.
curious to know what taxes would be paid, what rate, and on what amount. I might be able to answer some of that. On the IRA side, you end up paying taxes at your income tax rate when you pull money out of an IRA when you get to retirement, and it's paid on the amount that comes out. And that is if it is a regular IRA account. Now, there is the Roth IRA that we do a special webinar on, where the money that comes out is all tax-free. And so that's for the person asking that question, please call us or get some more information on a Roth IRA that ultimately will be tax-free rather than simply tax-deferred. But TJ, do you know what the rate is for 1031s? I'm assuming that's long-term capital gains?
Yeah, it's long-term capital gains, and it really depends on what your income level is. The higher your income level is, the more that you will be taxed on the back end when you actually decide to, hang it up and withdraw all of your profits. But it could be roughly somewhere in between maybe 15 to 20% is what I'm thinking. But once again, you want to check with your CPA just to make sure that, what I'm saying here is justifiable too as well.
Okay. Another question, 1030, is a 1031 exchange similar properties that have to be apartment to apartment, or could it be a single-family home to exchange in a mobile home park investment? I think the answer to that question, I know a great 1031 exchange expert. His name is Jack Shea. SHEA, but I think the answer is you doesn't have to be the exact same type of property. But TJ,
No,
do
it,
you have
it,
anything to
it
add
does
there?
not, Scott. It
Right.
does not have to be the exact same type of property. It just has to be a property that's similar in larger value. So you can let's just say, for instance, if you have 5 rental properties and you decide that you want to upgrade and go a little larger into the multifamily apartment space, you can take those 5 rental properties you have, sell them into a 1031 exchange, and use those profits to now go and buy an apartment building.
Okay.
Yeah,
Another question. We had 2 people. I think they're asking almost the same question. You mentioned the refinance strategy where you pull out some of the equity and not pay tax on doing that.
correct.
What is your tax if you were to pull that out and refi and then you sell the property technically with no gain, how does that affect you from a tax standpoint?
Huh, that's a great question. When you actually refi, you're able to take the equity out and then use that equity and maybe move it into a larger building without having to pay the taxes on it. Now, when you do sell, that's a situation to where you will have to pay taxes on that money sometime in the near future that you did take out once you did refi.
Okay.
Mm-hmm.
Yeah, I think that's a question. Yeah, you have it generally. You'll end up having a basis. And again, some of these tax questions, I mean, some of you're getting a little more details. For all of you, definitely we can refer you to people who are, tax professional. I'm sure TJ has some people as well to get the exact answers
Absolutely.
day to day on that. So, somebody did ask about the tax benefits of depreciation. I think we talked about that. Maybe I don't know if they came in a little bit late, but maybe just recap that again. Depreciation does not happen in an IRA. But outside of an IRA, depreciation is definitely a great tax advantage. Maybe TJ just maybe cover that briefly, and then we'll just move on to the next slide.
Absolutely, yes. So depreciation, if you're not investing in real estate with a self-directed IRA, simply if you buy a home, a single-family home as a rental property, you're able to depreciate that building by 27 and a half years. Now, you can't go and depreciate it by 27 and a half years. The following year, you have to break it down in regards to the amount of income that's earned inside of that property every year. On the commercial side of things, when we're dealing with multifamily apartment buildings, the government taxes or allows you to use depreciation a little bit more favorably, saying that you can depreciate the building by 39 and a half years. Another good thing is you get to depreciate some of the items that you purchased or even cosmetic materials that you're purchasing for your rental properties, whether it be single family or commercial multifamily. So let's just say, for instance, that you go out and buy new cabinets for your kitchen. You get to depreciate that over a certain amount of years too as well. So over time, you're generally making a lot of money here, but it's not something that you can do overnight. But depreciation is something that works well in your favor once you decide to invest in real estate. I do have some references that I can give to anyone here. Maybe after the webinar is over, Scott, I'll give out my contact information, and if they have any further questions, I can refer them to these real estate tax professionals, and maybe they can follow up with some of the questions that they have. If I didn't answer it to the best of my abilities, they can follow up with these references too as well.
Yeah, we'll definitely give you the contact information at the end. Another question quickly pops up. If properties were purchased under an LLC, is it possible to include these properties in an IRA? The answer to that is if you're looking to buy property using IRA funds, it is possible to utilize LLCs to kind of put them all under one. Same thing you can do outside of an IRA if you're using LLCs as a liability protection device or just for other purposes. It is possible for an IRA to buy real estate under an LLC umbrella. We have plenty of webinars on that particular topic. Another question, if I own a rental property free and clear, can I roll that into a self-directed IRA? Unfortunately not. If you own some property personally, you cannot move that into an IRA account. There are some rules and some restrictions on your IRA being able to, it has to purchase assets that are not owned by you or certain family members. So if you own something already outside of an IRA, unfortunately, it cannot be used. So just want to get those quick questions answered. And TJ, I'll get it back to you to talk about some appreciation.
All right, cool. Thank you so much for that. And I appreciate you guys chiming in with all of your questions, too. Let's talk about appreciation here very briefly. There was a famous quote by a successful author. Some of you guys may have heard of him. His name is T. Harv Eker, and that quote goes by the saying, "Don't wait to buy real estate and wait." Over time, values climb higher and higher. The increase in value can happen because of many outside economic forces, but the two that really stick out may be due to inflation or the demand for your type of property. When a specific type of property in your area becomes scarce, the value will increase immensely. So on the next slide, let's discuss some ways how we can get our property to appreciate. The great thing about being in the real estate business is there are strategies you can use to appreciate your property faster than normal. The key here is to buy low in an emerging market. Make sure that you are always buying in the path of progress where you see lots of new construction taking place. This can consist of shopping centers, strip malls, etc. Also pay attention to Walmarts, Targets, or Publixes that are being developed in the area. Be sure to take a look and intervene with the city's overall master plan and see what it entails for the next 5 to 10 to 15 years. Where's all the growth happening? Make sure you talk to local city officials in the area to determine where the most building permits are being pulled and approved. These are areas you want to keep an eye on. And last but not least, you can always force the appreciation by purchasing a distressed property, rehab it, and the value will increase. So moving on to the next advantage, which is just as powerful in its own right, is preserving and protecting your principal, which you work so hard for, and that is protecting our assets against inflation. Real estate compared to traditional models of investing, such as stocks, CDs, mutual funds, 401ks, is the safest way to grow, protect, and preserve your wealth. You may ask, why and how is that? One word, folks, inflation. Real estate has proven well before me and you ever existed to be one of the best hedges against inflation. Some may say, well, what about gold? Yes, gold can be used as a way to protect the value of your dollar dropping, but the big difference here is gold does not yield dividends. In real estate, with rental properties, you have cash flow coming in on a consistent basis. Again, giving you the liquidity you need. Tell me this. If inflation is currently at 2.4%, which it is in today's market, and you're only receiving yields as high as 2 to 4% in these traditional models, how are you making money? Well, let me give you the answer to that question. You're not. And simply because of the taxes that you have to pay as well. Your profits are pretty much getting ate alive by inflation. But when rents from your rental properties are constantly going up every year at the rate of 3%, are we protected there? Absolutely. Not to mention, real estate yields above average returns that you can't get in traditional models of investing, allowing you to reach your financial goals much quicker, securing the lifestyle you want to live. In the next slide, I mentioned some short relative examples of inflation. So let's just say you have $100 today in your wallet. What you could have purchased today for $100, you could have purchased last year for $90. A gallon of milk in 1970 cost roughly $1.15. Fast forward to today, a gallon of milk is $4.50. So moving on to the fifth advantage we have in real estate is having control and power over our decision making. The greatest asset we were born with is having the power of choice. Having the power of choice gives us all control of the decisions we make. Once we give this power away, we leave it into other individuals' hands to control our destiny. This is what happens when we invest in the stock market. We release all control. My belief is the reason why you and I were born is so we both can control our own destinies. Let me ask you guys a question. How much control do you have by investing in the stock market? For those of you who may not know, none. The stock market is speculative, volatile, and sensitive to news. If you're invested in a company and you don't have controlling shares inside of that organization, all it takes is generally one bad decision from the CEO of that company for your shares to drop, or even worse, tank. Then what do you have left? Nothing. Everything is depleted. We can't afford to lose our principal. But when you have real estate in your portfolio, you decide how much money you want to put into the property. You decide which tenants are the most qualified to be in your property. You decide who you want to manage your property. And not to mention, you get to negotiate the price on the property. In all, investing in real estate allows you to take back all control of your finances, creating the lifestyle you want. Now, I know this may be a little off the subject, but individuals born between the years of 1946 through 1964, 26% of the workforce is made up of this demographic. And it's not because they want to work. It's because they have to work. There is a difference. It's never too late to make that change and explore other options such as investing in real estate. Last but not least, moving on to the sixth advantage, which we'll cover, I feel is one of the most powerful ways to accelerate your returns and grow your wealth at an astronomical rate is using the power of leverage, which we also call the compounding effect. Yet again, this advantage will prove real estate is a tool that is not comparable to any other investment. Real estate is literally in a league of its own. I'm going to use the stock market as a comparison again, simply because so many people are invested there. One thing you can't do in the stock market is say, I want to buy 50 shares of Apple stock for $40 a share, when each share costs $50. And no matter how many shares you buy, the price never changes. With real estate, everything for sale is always negotiable, allowing you to create more equity when you buy. Real estate allows you to leverage your capital to achieve your financial goals much quicker. You don't need a ton of money to invest in real estate, as some people may think. Ladies and gents, have you ever heard of OPM? It's an acronym for other people's money. All successful wealth generators use OPM to create wealth for themselves. Hell, look at the Donald. He went bankrupt, went to the bank and said, give me a loan. Guess what? You get to do the same. If you have $100,000 to invest and you find a property for $100,000, you can go to the bank and have the bank give you a loan-to-value ratio of 80% of the purchase price, meaning the bank will loan you $80,000 and all you have to bring to the table is $20,000, which still leaves you $80,000 to invest. Now you can spread that $80,000 out you have left over and buy 4 more houses worth $100,000. Now you have accumulated $500,000 in real estate with only $100,000 of your money. Keep in mind, all the while renting your property out to tenants while they pay down your mortgage for you. So let's say your 5 properties appreciates by 5%. Essentially, you're getting a 25% return because you have leveraged your capital. Isn't that awesome? Ladies and gentlemen, this is something you can't do investing in the stock market. You can't do this investing with mutual funds, CDs, or 401ks. Moving on to the next couple of slides, we will discuss a few things you need to be aware of, such as how to identify the right investment. So let's get right into it. There are 5 key economic indicators that you want to identify, such as job growth being number 1. Number 2, you want to know what is the unemployment rate compared to the national average. Look for the percentage to be neck and neck of the national average or under it. Number 3, does the government have any tax incentives or abatements enticing employers to come there and create jobs? Number 4, are companies migrating or leaving the area? You definitely don't want to buy in an area where jobs are leaving. And number 5, you want to know what area of town is experiencing the most growth. Of course, you always want to make sure there is a specific need for your type of property in the area. As investors, you never want to buy the property for retail value, so make sure you're able to score the property lower than the replacement cost. We are in this business to make money, not lose. You also need to be aware of how much money will it take to repair the asset. If you are buying single-family homes, you need to know what properties in the same area are selling for in similar condition comparable to beds, baths, and square footage of the subject property you're interested in. If you're buying multifamily, you want to know the price per door properties are generally trading for in that area. And last but not least, what you can sell the property for once it's been rehabbed, repositioned, and stabilized. Just like with any other investment, there are risks to investing in real estate. You need to know what risks to look for and, of course, how you should be mitigating these risks. Before taking title to the property, you always want to run a title search to assure you are getting a clean, marketable title. Again, we already touched on running comparables in the area to assure you are not overpaying for the property. After receiving estimates from licensed contractors, and the key word here is licensed contractors, be sure to hire a professional home inspector to check the mechanical functionality of the property, such as the roof, AC, plumbing, and the electrical. Last thing you want to do is take title to the property not fully knowing what condition these items are in. These are the most costly items to repair or replace in a home. And of course, most people starting out in real estate want to know how much money do they need to get started. Typically, the lowest entry point for it to be worthwhile for anyone is roughly from $50,000 to $100,000, and that's $50,000 to $100,000. Let me correct myself here. But in some cases, depending on who you are partnering with, you may be able to invest as little as $5,000 to $10,000. Just really depends if the sponsor is pooling money. If you guys are not sure of the term pooling money, what it means in simpler terms is the manager, the investor, or the sponsor who you intend on partnering with is bringing individuals together to create an investment fund. And you also have crowdfunding platforms out there that let you invest as little as $5,000 to $10,000. Now, there are people out there that may not have liquid capital to invest. But it does not mean if they don't have liquid capital, they can't invest in real estate. There are other means that you can invest in real estate as well. So let's briefly talk about them. Most people have no idea that they can use their IRAs, 401ks, 401bs, and or CDs to invest in real estate. You want to know why? Because Wall Street doesn't advertise this to the masses. My belief is why they haven't advertised it to the masses is because they haven't figured out how to regulate it so they themselves can make a profit. So therefore, they don't publicize it. You need to know that brokers and their firms will only limit you to the products they are selling. That is always in the best interest of themselves and their firms to make the most money. In real estate, using any one of these models, all you have to do is talk to your current plan administrator and let them know you would like to roll your funds over into a self-directed IRA. The self-directed IRA will give you more control over your money and allow you to invest in real estate. I'm pretty sure Scott here can guide you along the way in the process. But what will usually happen is your current plan administrator will hand you some paperwork you need to fill out. The process generally takes a couple of weeks or so before your funds are transferred over. Now, if you have liquid funds just laying around, of course, the process is much quicker. So moving on to the next slide, people also want to know, are there any fees to roll my funds over into a self-directed IRA? And the answer to that question, ladies and gentlemen, is no. You don't pay any fees to roll your funds over. Tell your administrator you're interested in rolling your funds over. They will hand you some paperwork, and it's just that easy. Moving along, you want to know about taxes. Do you have to pay any upfront taxes to roll your funds over? There are no upfront taxes that you need to pay when rolling your funds over. Also, keep in mind, as we touched on earlier in this presentation, any profits you make from your investments with your self-directed IRA are tax-free. For example, if you acquire a property today for $100,000 and you immediately sell it for $125,000, the profits earned from this investment, along with the original investment of funds, is deposited back into your self-directed IRA account tax-free. You don't pay any tax on the income earned. Again, this allows you to build and accelerate your wealth much faster. A question that may be sinking into your mind while hearing all of this powerful information is, what if I want to invest but don't have any experience? Well, the answer to that question is you should be partnering with a professional real estate investor. Now, should you go out and partner up with any old Joe Schmo who claims to be a professional real estate investor? Absolutely not. Matter of fact, I forbid you not to. You should have a sit-down with this person first. It's kind of sort of like playing the dating game. You want to get to know them a little better. This will give you the opportunity to do your due diligence. And just to help you out, I will let you know some questions to ask the person who you intend on partnering with. So moving right along, some of these questions you need to ask is, how long have you been invested in real estate? There are different aspects of real estate you can invest in, so you definitely want to know what aspect of real estate do they have experience in. Of course, you should know what type of returns are they able to achieve if you decide to invest. Also, how long will it take for you to get your initial investment back? And of course, you want to know, are they a one-man operation or do they have a team they work with? I'd honestly say stay away from one-man operations. And last but not least, who does their team consist of? Since you now know the questions you should ask, you should also be looking for specific answers as well, too. And here they are. Make sure they have at least 3 to 5 years of experience in their particular field of real estate before investing with them. There are many avenues of real estate investing that can be lucrative. And starting with the commercial, you have, as you see here in the slide, multifamily apartments, development of raw land, retail, you have strip centers, strip malls, mobile home parks, medical offices, and then you have the paper side of real estate investing, which are notes and tax liens. And then you have the residential side, which is single-family homes, where you can either buy and hold them or you can fix and flip them for profits. You want to definitely also be aware of investors advertising guaranteed returns. Nothing is guaranteed in investing. If you ever come across a guy that's saying, hey, my returns are guaranteed, you should run, Forrest, run. But I will back this up by saying if the investor is experienced and has knowledge, the risk factor is literally little to none at all. And, of course, everyone wants to know, when will they get their initial investment back? Now, I can only speak for what we do, for our investors and how we operate, but our focus is on acquiring multifamily apartments and single-family homes for long-term wealth creation. Usually our investors see their initial investment return in 2 to 5 years. Our model is long-term. But in the meantime, we distribute cash flow on a consistent basis, giving our investors the liquidity they need, so they are seeing some type of return right away. Make sure, if they are working with a team, which I highly prefer, the team consists of licensed contractors who can pull permits and perform the work. Be sure they have a management team consisting of a property manager who can oversee the day-to-day operations. We don't want to consume our time showing up to properties with hammers trying to fix leaking sinks and toilets. That's not why we got into this business. And, of course, you need a real estate attorney who can run title searches, making sure there are no liens against the title. Attorneys also become a valuable source to you as well because they draw up tenant leases and contracts that are abiding by your state laws. And with all what we've learned here in this brief webinar, let's summarize as we get ready to come to a conclusion what we've learned. We've learned the many ways how real estate can be a lucrative investment. We've identified 6 advantages of investing in real estate you have. What key factors make real estate a good investment, such as the tax benefits that work in your favor. We also discussed how real estate is one of the best hedges against inflation. We learned about some of the risks that could make or break you and how to identify these risks. We also learned how much money does it take to get started investing in real estate. We also learned how can you use your funds from your IRA, 401k, 401b, CD accounts to invest in real estate. We learned, do you have to pay any fees or taxes when you roll your funds over from any one of these traditional accounts into a self-directed IRA? And last but not least, we learned how you can invest in real estate without any experience. And to finish it all off, I'm going to leave you with some quotes in regards to real estate from influential entrepreneurs of our time, past and present. 90% of millionaires become so through owning real estate. Andrew Carnegie. The major fortunes in America have been made in land. John D. Rockefeller. Landlords grow rich in their sleep. John Stuart Mill. Buying real estate is not only the best way, the quickest way, the safest way, but the only way to become wealthy. Marshall Field. Every person who invests in well-selected real estate in a growing section of a prosperous community adopts the surest and safest method of becoming independent, for real estate is the basis of wealth. Theodore Roosevelt. Real estate can't be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. Franklin D. Roosevelt. Moving right along. I've made a tremendous amount of money on real estate. I'll take real estate rather than go to Wall Street and get 2.8%. Forget about it. The daughter of the Donald, Ivana Trump. Now, one thing I tell everyone is to learn about real estate. Repeat after me. Real estate provides the highest returns, the greatest values, and the least risk. Armstrong Williams. It's a comfortable feeling to know that you stand on your own ground. Land is about the only thing that can't get up and fly away. Anthony Trollope. Last but not least, I got rich off of TV, but I parked my money in real estate. Oprah Winfrey. So here is my company, National Homebuyers Group, with all my contact information. As we get ready to sum this webinar up and move on to the Q&A portion of this webinar, take down my contact information here. Feel free to reach out to me at any time. I am a very busy guy, but I do check my messages quite frequently. I will make it a priority to get back with you when the time permits and answer any questions that you may have to the best of my abilities. One thing I want to do, if it's okay with you, Scott, is for all of the people who have joined on this webinar, I want to give them a gift. I'm really, truly, dearly in the business of helping people and try to provide as much value as I can. I do have a book that's currently on Amazon called How to Protect Your Assets and Preserve Your Hard-Earned Capital. For anyone who would be interested in receiving this book, I'm willing to give it to you guys as a gift for free. All you have to do is just send me an email here to tj@nhbgroup.org and type in the subject box, Protect Your Assets, and I will get that book over to you immediately. It will come over to you in PDF digital format so you can download it and you can start reading it right away. And pretty much it goes into details about all these traditional markets and the things that brokers usually don't disclose to you until you find out when it's a little too late in the game, you're not getting the returns that you're supposed to be getting. But simply, hear a little bit about what we do at National Homebuyers Group is we are real estate syndicators. For those of you that don't have a clue what that is we bring a group of individuals together, such as yourselves, and we buy distressed, underperforming assets that consist of single-family homes and apartment buildings ranging anywhere from 10 to 100 units. Now, these apartment buildings are rather large assets. You normally wouldn't think you can go out and purchase on your own. But by coming together collectively as a group, we tend to make it happen. Once we are in total control of these assets, we reposition these buildings and stabilize them, making them wildly profitable. And we all share in the profits. The other great thing is we get to cash flow these assets for as long as we want, ultimately securing our futures, compounding our returns, creating wealth over time. This allows our clients to create the lifestyles they want without them having to cut back on what they're doing or even downsize how they're living. At this time, unfortunately, I don't have anything that I can present to you simply because of the rules garnered by the SEC. Using the syndication model, we kind of have to go by these rules here. And for you guys who are not sure, the SEC it's the Securities and Exchange Commissions. So we generally want to stay on their good side. The rules in order for me to offer you an investment is we need to have an existing prior relationship. So if anyone here is interested in seeing how we could possibly work together, let's have a sit down over a cup of coffee, especially if you're in the Tampa Bay area. This way we can get to know each other a little better. If you're not in the area and you have interest, let's set up a phone appointment. Or if you have an iPad or iPhone, we can also do FaceTime. If you have Skype capabilities, that works as well too. If you're not sure how to set that up, me and my team here can simply walk you through that process as well. This will give you the opportunity to see firsthand who you will be dealing with. I'm open to listening what your goals and needs are first, and then at that time, see if it will be a good match for us to team up together. My contact information, again, is here listed above. Take the next 5 seconds or 10 seconds to write that down before we move on to the Q&A portion of this presentation.
Yeah, TJ, thanks for coming on, and certainly if anyone has questions on syndication, how other things we talk about, they certainly reach out to TJ. We are up against a little bit on time, so I do want to jump into some of the questions we have here and get to those. And again, just encourage anyone. I think TJ had a great point. When you're investing with other people, make sure you're researching them, evaluating them, asking the right questions. Advanta IRA, if you're investing through your IRA account, we don't do that. And that's something that just to be upfront, when you're investing in a self-directed IRA, you are in control. So it is up to you to do all your due diligence. And please remember that's always very important for individuals to do. Now, one of the first questions we had said, if you're looking to invest or use an LLC to purchase real estate with an IRA, can you co-invest with another LLC or individual? And the answer is most definitely. You certainly can. There are very specific rules on structuring that, but it can be done. And we do have classes we talk about LLCs, and that same person asked that question also asked about other webinars and seminars that go in more detail on self-directed IRAs, structuring the investments, how it's managed, etc. We do offer a lot of those classes on our YouTube page. They're there for playback. This webinar will be on there as well if you want to listen more about what TJ was talking about. And we do a lot of those webinars throughout the month as well. So sometimes we try to bring on guests. That's why we had TJ on today to talk about the pros and cons, different obviously the benefits of investing in real estate from a tax perspective, from appreciation standpoints, etc. So certainly go on there to find that information. Someone asked about, can I have 2 separate IRA accounts? The answer is yes. TJ mentioned rolling over, transferring from one IRA to another. You can certainly do that on a partial basis. You do not have to move over the entire account. Whatever you move over is transferred tax-free. One thing TJ mentioned on fee-free, there's a nominal fee on our end in establishing an account. But you do sometimes want to, most of the transfers or rollovers are done without any fees from your other custodian, but you may want to check every now and then that some custodians may have a fee on that. But regardless, if there is a nominal fee, the money does come over without any tax consequence. One question for you, TJ, someone asked, do you have any suggestions on what a rental agreement would or should look like?
What a rental agreement would and should look like. Well, definitely you want to make sure that the person is qualified to be renting your property out. Generally what we do over here is our property manager doesn't qualify anyone who doesn't make at least 2 or 3 times of what we're charging for rent. And just to protect yourselves, I mean, we can go and we can do a whole nother webinar on this, but just to kind of keep it brief, you want to make sure that you lay out all the rules that you expect the tenant to go by, and this can vary from investor to investor. But if anyone who is interested in learning a little bit more specifically, how we are able to draw up our tenant contracts with our tenant, please feel free to reach out to me, and I wouldn't have any problem going into depth with you at that point. But I don't want to take up too much more time here, since we are on a time schedule and we're kind of nearing the end of the webinar at this point.
Yeah, and that same person followed up with saying they're more, I think, interested in the rental agreement maybe between the owner and the property manager, or the rental company, not the owner and the tenant. That's, again, I think that's a great question.
Oh, okay.
To take with TJ off, maybe take with you offline and give you a call. Someone asked, can the IRAs be sued by the tenant? The answer to that is they can. IRAs, as the owner of real estate, can be sued by a tenant. So a lot of our clients maintain the proper property insurance. They might use an LLC or land trust, other ways to protect their IRA. That's a great question to take up with an attorney on how best you can protect yourself, because IRAs can be sued by the tenants themselves. So that's a great question to bring up. Let's see, we had another question or two here to get in before we can go. Someone asked about the replay. Yes, the recording will be sent out to everyone if you missed part of it. It also, again, will appear on our YouTube page as well. Someone asked about minimum investments. In regards to IRAs, there's really no minimum. It's how much you want to invest and what your investment requires. As far as investing with TJ and maybe a syndication, maybe that's another good question to take with him offline. I do want to wrap up the webinar. We're a little over our time today. But again, TJ, thank you very much for coming on.
Absolutely. Thank you so much for having me. It was a pleasure of mine. Glad to offer as much value as I can.
Yep. And again, everyone who listened today, you'll get a copy of the recording. If you were listening to the recording, you had TJ's information on one of the slides. My information is here at the end if you have questions. Again, my name is Scott Maurer with the Advanta IRA. If you have questions on the IRAs, or if you want to see, if you want to get more answers on specifics, again, I covered IRAs very briefly at the beginning of the presentation, because the goal of today's presentation was to have TJ share his knowledge with us. But if you want more information on IRAs, please go to our website. We have an events tab where other upcoming webinars and seminars appear, or you can certainly just flat out give me a call, and I'll be happy to run through your scenario, what you're looking to do as well within your IRA account. So at this time, again, I want to thank everybody for attending. Thanks again, TJ, and we look forward to talking with you.